Stephen Clapham, how are you, buddy? Welcome back
I'm
to F.A.C.E.
I'm very well. Thank you for having me back. It's great to be here.
It's always great to have you back. I want to ask you, I know that you were agnostic in the gold market last time we talked. Has recent action changed your mind at all?
Not really. I mean, I was slightly laughing earlier because you had on a gentleman who
Laughing at who? Laughing
sounded
at who?
English. Yeah, it was an English guy who was talking about sterling, and he said,
Oh,
"Oh,
yeah.
this, the budget has been dragging on since Liz Truss's days." And
Yeah.
it made me think because last time I was on, your colleagues or the people in the audience were all very concerned about the very short term. And I understand you're all traders, and so you've got to be concerned about the very short term. But I'm much more concerned about the medium term and the long term because I'm no good at trading, right? And the
Most
gold,
aren't, Stephen.
the issue with gold, Dale, I think, is that gold is an insurance policy.
Right.
And
Like fire insurance. You hope you don't on your home. You don't want to
yeah,
have to collect.
yeah, I don't own gold because I think it's going to go to $3,000 tomorrow, but I own gold because I think it could very well be $3,000 in 3 years' time. And if
Oh,
it is $3,000 in 3 years' time, the rest of my assets aren't going to be worth very much. So my thinking is that you have a certain percentage of your portfolio
well,
in
is that a
gold.
change? I mean, last time I brought it up, you didn't talk about that had a long-term view on it. So, have you been in this position for a long time,
Yeah, I
just
mean,
as an insurance policy?
I've 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 always had a little bit of gold,
Yeah,
and in the since we've had some inflation, I've increased it a bit.
yeah.
Obviously, with what's happening to interest rates, you wouldn't expect gold to perform, but I've been quite puzzled that people haven't been flocking to gold more aggressively because you would think that people would be worried about the economy, people would be worried about inflation, people would be worried about the amount of government debt, and gold is a logical thing to own in the face of all that.
Okay, just sounds like a different song than I heard last time. Last time, it sounded more like "Who needs it?" I'm not a gold person. But
No,
let's move to something that you talk about things like medium term. So, we had a big dollar break, and I want to know what your view is when you look at the dollar. Here's a weekly. If you think this is a major shift or just a correction in the dollar, and that would tie in with, what you're thinking about cable and euro, etc.
well, I think it's a correction. Personally, I
Okay.
when we had the dollar hit 103 overnight, I was frantically trying to sell the dollar, and I it's now gone up back up to 118, but you know, it sterling is incredibly weak, and I think people have overdone their bearish view on the dollar. But you look at the dollar sterling, the dollar yen, the dollar euro. I mean, it makes it look like everything's fine with America, and I don't think that's right. I think America's been doing better than some other parts of the world,
Yeah,
but
best dirty shirt in the neighborhood.
best dirty shirt. And I
Mhm.
mean, I was in the States in the summer, and it was $1.20 to the pound. So when I went into a restaurant, I looked at the menu and I could translate into pounds because by the time you've added a 20% tip, it was dollars per pounds. And I mean, it was astonishingly expensive going to Hicksville, Arizona, relative to I live in central London, which is one of the most expensive places on the planet. But guess what? Hicksville, Arizona, a steak costs more than in my local restaurant.
Is that a real town in Arizona, or that's
Yeah, yeah. You've not been?
No. And I lived in Phoenix for a while.
No,
I've never heard of Hicksville.
no, we didn't actually go to Hicksville, but we went round various, and America's such a beautiful country, and it's a fantastic place to visit, and I love America to visit. I love Americans, but the dollar I don't love quite as much, because not at this price. It doesn't make sense to me.
Okay, so you're bearish a dollar then. So
Yeah,
you
not short term. I mean, it's 118 against sterling. I could
right.
easily see it back at 106. But
Okay.
if we were to come back in 2 years' time, I'd be very surprised if the dollar was stronger than 120 against sterling. And it's nearly
I agree.
250 against the yen, yeah?
Yeah.
And I mean, that seems unrealistically strong to me. I mean,
Okay.
I'm not.
I'd love to see 109. That would just be a 61.8 correction. So I'd love a buying opportunity there. That's just my view. What
Yeah.
about rates, Stephen? The 10-year took a pretty good hit on, it's just one report. You think people are going to end up being disappointed on rates that they haven't peaked and there's another high coming?
Well, I was quite surprised at the strength of the reaction to one inflation print.
Yeah.
Which it wasn't like if you went back 2 years and you said we'll print that inflation number in November 2022, what do you think? People would have told you that you were mad. They said, don't be stupid. Inflation could never reach that level. And inflation is far from gone out of the system, especially in the US, because your economy is still pretty strong. I mean, the UK is in recession. The US economy still remains strong, and I think the Fed will carry on. I don't see any reason why the Fed would stop raising rates. They might not raise by 75 bips every meeting, but they're going to carry on putting rates up. And I don't see why there was such a strong reaction in the 2-year on the back of one inflation print. And obviously a massive reaction in the equity market, which basically tells you that people want to buy the equity market, but my view remains that we're in a long-term bear market, and that we've seen a bear market rally. And I think it's very important to understand that, because bear market rallies are really fantastic trading opportunities. Fantastic. You get very, very sharp, very, very quick improvements in the market. But at some point, you need to fade your positions. And that's, that would be my strategy. Not going into Christmas, because this is seasonally usually quite a good time in the year, may not be quite as strong this year, because I suspect that a lot of professional managers are going to do massive rotations of their positions, because if you're a professional money manager, you do not want to have Meta in your top 10 holdings come the end of the year. So I think those big losers will lose more. And I don't think the seasonal rally will be as strong as it traditionally is, especially as we've had a decent rally. And in the new year, I'd be looking to take profits again, because I don't think that 2023 is going to be a brilliant year.
View on energy being in the UK, are you worried about it this year? Here's
we've got, so the UK government has, I mean, don't ask me why they do this, Dale, because what they've done is they've
supplement it.
Well, they've capped energy prices for everyone.
Yeah.
Now, I'm very grateful, but guess what? I've got quite a big house. I can afford my energy bill, and I think I probably should pay for it. So on Thursday, I think what we'll see is quite a radical change by the Chancellor. Now, interestingly, I was at the Sunday Times Business Christmas drinks last week, and for the first time ever, the Chancellor of the Exchequer not only pitched up, but he made a speech. That is how keen they are to get back on side with business. That is how keen they are to be making a favorable impression. It was the Chancellor's birthday, and he took time out from going to dinner with his wife in order to go and say, do a 5-minute speech. So they're in a pretty desperate situation. And what he said then was, he said, I don't have a pleasant message to give you guys and ladies and gentlemen. It's really horrible. Taxes are going up. And what seems obvious thing to me would be, instead of capping energy prices, would be to give more help to the lower paid and the worse off, so that they can pay for their energy bills, but not give me any help. Because, why? The government is desperately short of money. They need to raise something like £50 billion. That's the fiscal gap. And so what they should do is they should make people pay the high energy prices and burn less fuel.
Yes. Okay. All right. No, not being it's like a continuation of the precedent set by COVID, that every time there's a problem, that the government comes in to support their citizenry with, basically free money.
Yeah.
Right.
Well, that's exactly, you've hit the nail on the head. That's exactly what they're doing. And of course, it's a very attractive option for politicians.
Yes.
But at some point, you have to think about, how do you pay for all of this? And that is what Jeremy Hunt is now scratching his head over, because he doesn't have enough tax revenue. And, Liz Truss, the idiotic idea that, you cut taxes and hope you grow your way out of it, I thought it was absolutely stupid. But it's not just the UK. I mean, you look at every government on the planet practically has got too much debt. And, America is certainly not immune. And you could even argue that Britain's in a better position to some extent, because we've at least got a 14-year term on our government debt. The US government debt is much shorter. So the rising rates are going to impact the US government much more quickly than it will in the UK. So, this is, this is not being discussed very much in the United States, but I think it's a huge problem.
Yeah, the interest expense increasing, you mean?
Yeah.
On the debt service.
Debt servicing is going to be a massive issue. And, the problem we have is that corporations aren't paying any tax, right? So they haven't yet managed to really impose this 15% minimum rate. Corporations aren't paying enough tax. Rich people aren't paying enough tax, and they're using all sorts of dodges to hide from paying what is due. And the burden falls on the poor, and we've already got record inequality. Now, this is just not a sustainable situation. So something has to give, and printing money has got very severe consequences. I mean,
well, here are these the consequences, where you have a collapse in treasuries and gilts, and really what's different about treasuries from gilts, and they called that a crisis. Do you believe that we're in the middle globally of a sovereign debt crisis?
Yes.
Okay. All right. Because I was just looking at TLT, and it had a decent week, put in a higher low. But what bothers me technically is markets rarely bottom when you have confirmed momentum confirms the price, and that happened at the low. Almost looks like we could make another new low in treasuries here. I'm open-minded to it.
Well,
so
I think that's almost guaranteed, isn't it?
Well, nothing's guaranteed.
But the thing is, I mean, why? Okay.
I mean, we could also come out of here too. So I mean, we could come out of here, put in a higher low. It's just one indicator, and it's a pretty big part of my work. Is I really believe, and I'm, at times it throws me off. because markets rarely, but do sometimes peak when their momentum's being confirmed and bottom with a confirmed low. So I've seen them both happen. The dollar's an example. So the dollar came off pretty good, even though it confirmed the high here. So, you know, using this as a guideline would have kept you from being short the dollar. So this one, I broke my rules. I'm not willing to do it in the bond market. So do you think that, you know, there's some money flowing into things like uranium, Stephen? You know, nuclear reactors, is that the solution? You know, you look at some uranium plays and, you know, you had a big, real nice move. This is a uranium trust. And you think about it, I think Germany's keeping their reactors running longer than they had planned to. Is this the way out, at least for a stopgap measure, nuclear,
Well,
or is it long term?
I mean, I think some really smart people who were very early into this told me after they got in, which was and after the first phase of the rise, that uranium, the entire capitalization of the uranium sector was something like $28 billion. Something, I mean, it was just like farcically low. I mean, it's not something I'd looked at for a long time, but they've all been long uranium for some 18 months now. And, you know, it seems like one of these situations which has got quite a lot of potential upside and not a huge amount of downside. I mean, you know, we do have the COP meeting going on at the moment, and, you know, they don't have a clue. The politicians don't have a clue what to do to get us out of this situation. We're getting freak weather already. I mean, you know, uranium, nuclear energy is long lead time, but there is some various developments where they're looking at doing smaller modular reactors, which are much quicker to build and much more flexible. And that would be a big answer, not only to the climate change problem, but also to the dependence on Russian gas. And, you know, those two imperatives are absolute. I mean, they must be right at the top of any European politician's agenda right now. I mean, it's less of an issue, I think, in the United States, but it's still an issue.
It is an issue.
And in Europe, it is a massive issue because, you know, you look at somewhere like I mean, in the UK, we've only got one Green MP. But you look at Germany, the Greens have got quite a lot of power, and elsewhere in Europe, you know, that power is only going to grow, and uranium is an obvious answer to that. So I am familiar with this stock, Uranium Royalty Corporation. Is that like the gold and silver royalties, silver, wheat, and Oh, that's interesting. I must take a look at it. I didn't know one of those existed. I didn't think.
UROY is the symbol, UROY.
Okay.
I got this from Shy Girl. That's how she was approaching the uranium market.
All right, she's very smart. I wrote a note on Saudi Aramco before it got floated, and she was very nice. She was you know, promoting the note, but she's now got a huge following on Twitter, right?
Yeah. How about all the, you know, hand wringing and you know, drama playing out in crypto and Bitcoin? Any view?
It sounds to me like, you know, it's a toxic puke at the bottom, isn't it?
I think we could go a little bit lower, but I am beginning on the weekly. You're getting some divergence. So do you think these are good levels to start thinking about buying some Bitcoin now that everyone has? You think we're in a capitulation phase right now, right?
I think we're in the capitulation phase. I mean, you know, I don't really understand Bitcoin and crypto, but, you know, people that are much cleverer than me, you know, one commentator who I had in my podcast, Chris Wood, who writes the weekly Greed and Fear column for Jefferies. He was on my podcast about 6 months ago, and he's recommended that his institutions take a position in Bitcoin as well as gold. And, you know, he's researched it quite exhaustively. I was looking at 19,000 as being a potential entry point. The problem, I think, with crypto right now is how do you buy it and where do you store it?
Well, you can cold storage. You keep it in a wallet. You don't keep it on an exchange.
Yeah, well, that's
okay. So
that,
it's like having physical instead of trusting it in your bank or another outside source to hold it. You hold it yourself. You lose it, it's your problem. But no one, no, it's not going to be theft in an unregulated environment where they could dip into your account to support their losing trades.
Yeah. So
okay.
That, I mean, I was quite surprised that at FTX, but I think that what's happened will make people like me who've been on the sidelines watching it and wondering, when do I get involved and how do I get involved? It adds another layer of complexity to my entry point, because I've got to now figure out where can I buy it and keep it safe. And but when you see all these pictures of Bankman-Fried at on every bloody press outlet, and all saying, "Oh, it's the end of the crypto world," that makes me think it looks quite interesting.
Okay, well, you should have me on your podcast, because I think what's going to become a more important asset class is going to be food going forward, regardless of Ukraine being settled or not. Grain production is going to be down sharply again next year. We have a La Nina off the coast in the Pacific, which tends to be cold, dry on the West Coast, and I've seen it generate droughts in the Midwest. We already have one here out west. The heat in the summer that you had in Europe and India shaved another 10 tons off the grain supply, and the Fed can't print food.
I totally agree. I've done quite a lot of work on food in the past, because it was one of the sort of themes that I invested in when I was at the hedge funds.
Yeah.
And very simple analysis says that there's loads of people in Asia getting quite a lot richer, and when they get richer, they want to eat a lot more meat. And once you start to eat more meat, you consume a lot more grains, and they aren't making any more agricultural land. So that suggests that the value of the product is going to go up. And so I've got a very positive long-term view on this. I think the Ukraine situation is quite complicated, actually, and its impact on the prices. And obviously, you've had a very big spike immediately after the invasion.
Yeah,
and then
but grain prices were going up well before the invasion, for the reasons we discussed.
Yeah, huh? Yeah, and I think they'll go. I think they'll go back up again. I think they'll, they will revert to going up again. And I think this is a temporary. But you can understand, after it went up quite a lot, quite quickly post the invasion. So there's some profit taking to be had. And now's the point, it's going to turn soon, I guess, isn't it?
So the best idea that you have for people going into year end, Stephen, would be mainly to be in maybe T-bills and just avoid risk until next year, and own a little bit of physical gold, and maybe even be looking to buy Bitcoin at some point.
Yeah, another stock that I'm looking at is Facebook, Meta platform. That's another one where the people are puking it out, and I suspect that they'll be puking it out at year end, because the last stock you want to have in your top 10 is Meta Platforms. It's been the worst performing big stock, and it just seems to me, Dale, that everybody's going, oh, Mark Zuckerberg's gone mad. And, they're valuing his $10 billion a year wasted on his new toy of the metaverse. They're valuing it at the same multiple as they're valuing the ad business.
Yeah.
And, I'm not a big believer in Facebook. I don't think it's a growth company or anything, but I think it's got a lot of cash flow coming out of it. And I don't think Mark Zuckerberg is a stupid guy. And he might spend $10 billion a year for a couple of years or 3 years and then give up. Or he thinks that, he'll do something with it. But it's not, it's a finite spend. And Zuckerberg, he doesn't need the money, obviously, but he will be concerned about his share price because every single option that he's granted to his employees is underwater. So how's he going to motivate people? How's he going to keep people? He needs the share price to go up. So, at some point,
he shouldn't have dumped as much as he did last year then.
Well,
he dumped a vast majority of his shares into the highs.
But I don't think he dumped the vast majority, did he? I mean,
quite a bit. He was a big seller of Facebook before the name change. Yeah.
But he is quite smart then, right? So, but
he might have had a little inside information on that one.
Oh yeah, he may have had a clue. But the fact is that this is not about the money for Mark Zuckerberg, right? He's given away most of the shares to his foundation, right? And so he's probably selling those shares to reinvest in some, in a broader, more diversified portfolio, and he sold at the top. Fine, good luck to him. But he is built one of the biggest businesses on the planet. He will not want it to fail. So what's he going to do? He's going to try and make it succeed. So my view is that he will not carry on wasting money forever, and that the cash flows will win out. So,
All right. So the best place for people to follow you, Steve, on Twitter?
You can find me on Twitter at Steve Clapham.
There's your website.
Go on my website, behindthebalancesheet.com. If you hit that sign up button, you can get my free weekly newsletter. Free is my favorite price. And I send that out every Sunday morning my time. And it's been very, very popular. And
there you go.
Get all sorts of things on the website. Loads of free resources. If you go on the website and you hit investing resources, I've got YouTube videos helping you how to invest, helping you to analyze financial statements. I've got the top 20 newsletters, the top 20 investing podcasts. I've got loads of great stuff there, Dale.
Okay.
Help people and create.
Thanks for providing these resources for people, Stephen, and thanks for your time today. And I don't talk to you. I hope you have a great holiday season and Happy New Year, and we'll get together and see how things have panned out sometime early next year.
Well, I shall look forward to that, Dale. Thank you again.
Unless you have me on your podcast sooner. I'll see you in February, probably.
Cool. So I look forward to it.
All right, buddy. Steve Clapham, everybody.
Thank
you. You could follow him here, behindthebalancesheet.com, his website. Some excellent resources from Stephen. So that's a wrap, everyone. You could join the team in 15 minutes, 13 minutes on the Morning Edge. And I'll see everyone tomorrow for Turnaround Tuesday. Remember, don't just count your pips, count your blessings. Adios. You're welcome, Alexander. Bhavana, you're very welcome. See you guys.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.